You're listening to the Cash Flow Academy podcast with Andy Tanner, your source for investing made easy. Here's Andy Tanner.
Welcome to the Cash Flow Academy podcast. I'm your host, Andy Tanner. This is where investing's made simple, and we are going to have a delightful conversation. I can tell you already. We have a very special guest, Nicholas Wapshott, and he is the author of Samuelson, Friedman, The Battle Over the Free Market. It's available on Amazon.com. And before we started the podcast, I had the chance to speak with Nicholas a little bit about the timeliness of this book and this history. It's just going to be a very, very insightful conversation, I can tell. So with that, Nicholas, welcome and thank you for spending some time with us on the podcast today.
Andy, it's a great pleasure to be here talking about my favorite topic.
I'll tell you, guys like you and I don't know. I worry sometimes when I talk, it becomes a sleep aid for people, but I love economics and I love macroeconomics particularly. So for me, this is going to be a very, very exciting conversation.
It's always called the dismal science, and I don't understand it because some of the weirdest people on earth are economists. I mean, John Maynard Keynes, who founded macroeconomics, he made it up.
Yeah.
I mean, he lived about 5 lives simultaneously.
He's an interesting character. And the book is fascinating because it's almost like Godzilla versus King Kong of economics. I mean, it is like a monster movie. And the history, I love history because I feel that if we want to understand something, if we go to its roots and its origins and go back a little bit and see how the narrative unfolds, it really gives us insight. So what made you, first of all, give a little bit of your background and what made you interested in writing this particular book?
I'm a lifelong journalist, but I also write books. I've always written books alongside my journalism. I worked for the London Times and the London Observer principally. And I came to New York with the London Times. When they asked me to come home, I walked across the road to the Sunday Telegraph and joined them instead, because I arrived about 3 weeks before 9/11, and I felt that I hadn't had my New York time, proper time. I was there, sweeping up after the terrorists.
Wow.
Going to firemen's funerals and so on, which is not what I'm designed for, as you can tell. I'm designed for talking about this sort of stuff. Interested much in the temperature at which airline fuel explodes.
Right. It's an interesting time, as we mentioned. Let's talk a little bit about. I think more people are probably familiar with Milton Friedman than maybe Samuelson. Samuelson described himself as perhaps a cafeteria Keynesian, I think was the word. And so we have two opposite and opposing philosophies. We have Keynesian, who says, look, we should have government intervention. Government can do a lot to help the economy run. It has powers, and those powers can be used in an effective way. And then you have a Friedman who says, no. I'm a libertarian. I believe in the individual, and let's not shackle an individual with government policy. And so, as you decide to write this book, it's an interesting lens to look through and say, here's what Samuelson would say, and here's what Friedman would say, and these two titans battling out, and it's quite a narrative.
It was as if they were separated at birth. They were both Jewish. They were both about 5'7", not very big at all. They both arrived at the same place, the University of Chicago, because Paul Samuelson was just a prodigy. He'd been there a couple of years before Milton arrived, and yet they were in the same class, and they were competing all the time from that time when they were about 19 years old until they died in their 90s. So 8 decades worth of slagging each other off at every opportunity. Even when Milton Friedman died, after a delicate pause, Paul Samuelson went back and started kicking the coffin.
Oh, geez.
He did. He just kept going at it. Wouldn't let it go.
Amazing. Samuelson was truly a prodigy. Is a great way to describe him as a youth. I mean, I think he went to the University of Chicago around 16 years old. I think he was a teenager when he entered college. For me, I'm 54. I still couldn't get into that university if I tried. I'd be denied. But
he was a mathematician, which is very important.
Yeah.
John Maynard Keynes was a mathematician. He invented economics.
And Samuelson very much believed that that was the principal language of economics. It was just a mathematical issue, and that's really the lens he saw it through. Friedman, saw this through maybe a lens of policy, and that there's this value to the individual, and it shouldn't be this cold hard thing. The economy can work, and in your book, it's interesting. I think Samuelson even says, well, we've been lucky that it's worked out this way so far. We've been lucky. And then it goes into the Carter years. And when, Jimmy Carter takes over for President Ford, who just kind of was the runner-up, I guess, in the beauty contest, second attendant. When the beauty queen can't perform her duties, whatever they are, they always have a runner-up, right?
Johnson said of Gerald Ford, by the way, this is the perfect example of men not being able to multitask. He said that Jerry Ford couldn't whistle and fart at the same time. That's stupid.
Couldn't walk downstairs either. So you have you have Paul Volker, and he says, okay, we've got unemployment's high. We're going to raise interest rates. We're going to get this stuff under control. And so people look at that nowadays, right? We had the 2008 where we kind of rolled the snowball up the hill with Fed policy, printing money, and that sets the stage for where we are today. So it's this marvelous history in the book of these two philosophies. And now, certainly if you're a Keynesian, you're pretty happy, because as you look at policy today, that's really what's been adopted. Since COVID, where you finished the book with COVID, absolute, I don't want to say reckless abandon, but I don't know how else to describe the trillions and trillions of dollars that were just, I've always heard for years people warning about helicopter money, where you just throw money out of the helicopter, and it seems like it's falling from the sky. So what did you learn from researching these two men? I always tell people when they ask me, do you have a good book you could recommend? I says, if you really want to learn something, don't read a book, go write one, because you'll learn more by writing a book and organizing your thoughts and researching it than you could ever by reading one. It's almost worth writing a book from a learning experience standpoint. What did you learn from writing this book and in looking at the battle between these two different economic philosophies?
I learned most of all that any talk of a free market is nonsense. It might be a wonderful ideal, but actually it's impossible to have a free market in a world which is as complex as it is. Sounds a great idea, doesn't it? And that is that if only wretched democracy wasn't in the way, we didn't have a federal government trying to do what the representatives have been elected to do, you could run the whole place very easily, because after all, supply and demand is very simple. That's all you need to know. Chapter 1 of economics is all you need to know.
Yeah, Adam Smith says we have this invisible hand, and if we have competition, right, and people want to make a dollar, they'll have to get better goods and services at a lower price, and off you go, right?
In theory, that's what happens, but of course it's not true in reality, is it? Capitalism works fine by the rule book, if you just read the rule book. But in reality, instead of the customer, the consumer being pleased by free competition between rival companies, what really happens is that rival companies buy each other out, because it's much easier to buy out the rival than it is to go through the slow process of getting people to stop taking the other person's product and try yours and then stick with yours. So even the basis of capitalism is a lie, really.
So when we say that free markets can't work, what does it mean? What does it look like when they don't work? Like, let's say we decided to choose the Milton Friedman side of the coin. We say we're going to get government out. What would happen?
Well, a lot of people wouldn't get educated. A lot of people in this country don't get educated already, but far more people would not get educated. There would be no help from any state or federal government source which ensured that people got health insurance, for instance, because it's actually too expensive. Free marketeers would say, well, that's choice. They have the choice of whether to do it or not. But it's rationing by price. A lot of people just can't afford it. Or they have so little money, they'd rather risk it, health insurance, not having a health insurance, because they need to spend it on something else. But the market does have a truth, and that is it does reflect human nature. The fact is that we all want something for nothing. We all want a little more for a little less. And when you bargain with somebody, you come to an agreed price. Neither side usually is entirely happy with that, but it's a compromise. And that bartering has happened since the beginning of time.
The more I've studied this, the more interested I've become, maybe in less in the economics of it and the philosophy of greed, wanting a lot for little, wanting something for nothing. Yeah. And if you were to look at Austrian economics, or we'll call it Friedman economics, you have people at the top of the economic chain who are controlling a lot with money and power, and they want a lot for little, right? For example, they're going to charge a lot for insurance, as you mentioned, right? On the other side, the argument on the other side is people say, well, we'll pay everyone a universal basic income, and sure, they'll all get educated, but why do it if you are going to get a universal basic income and those people want something for nothing? So it's kind of strange. I thought it was unfortunate in 2008 when you had some bad actors that were going a lot for little, tremendously leveraged in their investments on Wall Street, tremendous returns. And when those went south, and when all those mortgage-backed securities and those collateralized debt obligations went bad, there was no penalty. And there was this thing called the Bernanke put born. Like, well, we can misbehave. We don't have to really be capitalists, because capitalists fail. Capitalists, when they screw up, are penalized. Capitalists go out of business and go bankrupt when they can't, manage their risks well. And so in a way, there was no real capitalism there, because Lehman Brothers failed, certainly Bear Stearns, but the rest of them, they're not only still around, they're doing the same things that they did back then. So
they didn't fail pure and simple. They were allowed to fail by the federal government. They actually put Lehman's out to dry just to see what would happen if we actually let one of these big banks go bust.
Yeah.
And actually, it meant that all of the CEOs rushed out to DC and said, am I next? What do we have to do? Where do we have to shovel the money? But we now don't have enough banks. This is not a free market because there aren't enough. There may be 6 principal banks.
So what's interesting now is we've printed, I think in the US anyway, I think it's about $4 trillion we printed in 2020, somewhere in that neighborhood. The Federal Reserve balance sheet's grown north of 8 trillion now. That's quite a sum considering where it was about $1 trillion in 2008. So $8 trillion in a little over a decade is.
After 2001, everybody was frightened that the shock of the terrorist attacks on New York Square.
Greenspan dropped rates, Yeah,
Greenspan just turned the rates down to 0.
Yeah.
That's really bad news for retirees.
And that's kind of a new standard now, right? I mean, 0 interest rates. If you've been doing business for the last 20 years, you've kind of built your business around that model. And if they were to try to do what Volker did today, what do you think would happen?
What Volker did effectively was to, what we would now call in computer terms, he rebooted the economy. He was recommended by Milton Friedman to follow monetarism, which was a sort of slightly crazy theory. But he said, yes, I'm a monetarist, all right, but he ignored Milton Friedman entirely. And what he did was just to try to raise everything and start and grow it all over again, as if you had a garden full of weeds, you'd put the weed killer all over it and start afresh next spring. And that's what Volker did, which is strange. He's a lifelong, I used to see him, he was a member of the Brook Club, which is in the street that I live in. And 6'4", little cheroot in his mouth. The stoop that comes from being too tall when you're 10, 11, 12 years old, charming, delightful man. But he was appointed by Carter, who then left him alone. Volker's diaries are full of, I was expecting the president to really get upset about this, that, or the other. Nothing comes from the White House. Carter actually just let him get on with it, which is an amazing thing in a president.
Yeah, it is. No micromanagement there.
Pouring money into the system, which is what we got. So Greenspan started it. 2008-9, the freezing of the institutions where banks didn't trust each other because of what you say, these really fraudulent loan packages. They knowingly mixed in, it's like cutting whiskey or wine, watering wine. They deliberately put bad stuff in among them, knowing that no one would ever get round to unpicking it. It was too difficult to do.
Yeah, by grouping them together, you could take the good, mix it in with the bad, and kind of say, hey, it's mortgage debt, right? Everyone pays their mortgage. This isn't bad debt. So today we are seeing some inflation, and Jerome Powell has said First, he said, okay, this is transitory. It's COVID, it's bottlenecks, it's nearshoring with supply chains. This is causing inflation. This will all work itself out. Last time they met, though, they said, hey, we need to start tapering some of our policy because we're seeing real inflation. So when I say, well, maybe there's no need to raise rates, but if inflation did take off, which it has, you can find evidence of this in certain countries. Certainly the Weimar Republic is a major economy that this happened to. Does the Fed have the power even, and even the European central banks, do they have the power to raise rates, or does it just completely, there's so much deflationary pressure, this arm wrestle between inflation and deflation that they're trying to control somehow. If we do see inflation, they even have the power to raise rates without just having the deflationary pressures take it over.
Just worth saying for a second why deflation, which is prices dropping, which sounds on the face of it a rather good idea. But it's not a good idea because people stop spending because they think we wait another couple of weeks, it'll be cheaper.
Yeah, unemployment goes up. People, if you drop prices, businesses make less money. They're going to let go of workers. You got to have price stability. I mean, the Fed's mandate in theory is price stability, employment, and reasonable long-term interest rates. And they have levers and buttons that they push and pull, trying to control this. I just don't know how many bullets they have left in their magazine. If we started to see inflation, they lost control of that. I don't know that they're maxed out in terms of the tools of reserve requirement. They're maxed out with their rates in terms of putting a floor with their federal funds rate and also the repo rate for international and non-member banks. So they've tried to create a floor on this. They can't go any lower, but if they were to take it higher, I don't know how the economy responds to that because everyone's model now is based on zero interest rates.
Zero interest rates means that banks have an enormous amount of money to invest and nothing to invest in.
Yeah, to your point, they have unprecedented amounts sitting at the Fed getting 0.25% because that's what the Fed will pay them. There's nowhere else to get a yield, or they with a decent amount of risk, or they do it.
Things are complicated because the United States dollar is the world trading currency. There's always demand for the dollar. We found this when the British Empire was in charge, and they found that the pound was constantly rising when it didn't suit the domestic economy. And that's what's happening here. The dollar will always be strong because everybody has to buy dollars in order to do their business.
Do you think that is the case? I mean, we've always had changes in currency throughout history. Used to use seashells, and then gold was kind of a big deal, and now it's Federal Reserve notes are a big deal. Now we have crypto. A lot of countries are saying, you know what, this is truly could be that's a volatile sucker. It's all over the place, but it's a thing. Big market cap to that.
The key to a strong currency or a reliable currency is the assumption that come the end of the day, the Federal Reserve will bail out the government. By definition, a sovereign nation cannot go bust.
Absolutely. I mean, that's really where
currencies.
That is.
No idea. Bitcoin, who invented it? No one has any idea. How many Bitcoins are in circulation? No one's got any idea. And Milton Friedman gone to a good point when the notion of monetary theory is that if you were to double the amount of money in circulation, you're going to get double the prices because it'll soon catch up with its own tail.
The one thing Friedman never did, though, is he always talked in terms of quantitative analysis, and he did not really look through the lens of velocity of money, though. The velocity of money is really a key component to whether and right now our velocity of money, at least in the States, is the lowest it's ever been because you have so much of it to move now. You have this ocean that the velocity is as low as it's ever been. So it is an interesting time. If someone were to say, hey, why should I study? Why does it matter if I study what Friedman and Samuelson had to say? What would you tell them? I mean, because this is the thing. I believe that there's probably not very many things that affect more people that there's more apathy concerning it. Like if you were to take up a debate like global warming, people at least know what that is, whether they agree with it or not, or the science or not. There's a bit of apathy there. But when it comes to economics, why should people study it? Why should someone read your book?
First of all, it's a rollicking good read, and it's full of gossipy stuff about extraordinary people. It's a complex subject. I found as a journalist that if you want to tell a story about concepts, don't write about the concepts, write about the people who hold those concepts. Then you can draw people in. And one of the problems about economics is that it's not business and it's not domestic economy. So what you do around the kitchen table has no bearing at all on what economics is about. Hear politicians say all the time that you wouldn't allow this to happen in your household. Of course you wouldn't borrow too much in your household unless you're nuts. That's the opposite of what's true in the government sense. They can borrow as much as they like, so long as their currency remains high. And one of the things that Milton Friedman did was put in this check. John Maynard Keynes, this extraordinary man who invented macroeconomics, fixed currencies more or less within a very small amount of change in relation to each other in order to provide a predictability which didn't exist during the 30s and the slump. That post-war settlement lasted until the early 70s, when Milton Friedman persuaded Richard Nixon to float the currency. Now, the currency, therefore, is now the conscience of the nation. If you're doing something really bad, your currency is going to go down. And if you're doing something really good, if you're paying off your debt and so on, then the currency will go up. Probably too much, actually, because then your exports are too expensive to sell. So you've got to keep it in exactly the sweet spot, which is not so easy to do, because it's sort of out of your control. The economy is such a large juggernaut that whatever you do, you have to wait weeks, months before any changes happen at all.
It seems to me like they're riding a wild animal, trying to tame it. And it's our nature. We don't want to die, and so we're going to manipulate our genetics. We don't want to have the environment go, so we're always meddling, trying to figure it out.
Right. Let me just talk about debt for a minute, because everybody's worried about debt. And if you've got credit card debt, you should be worried, because they charge an arm and a leg for lending you money, and you're doing it in order to, get something cheap in the Black Friday sale or something. But it means that you go into debt, and Mr. McCorber got it right, if you don't earn enough to cover your spending, you're in trouble. But if you earn just one penny more than you're spending, then you're okay.
Well, the government doesn't need to worry about debt because they can always print money to pay off debt. So where you and I would need to, if we're going to use debt as a lever, which is a very important part of wealth building, right? I'm always leveraged all the time. I'm leveraged in my real estate, somewhat leveraged in the stock market through the use of options. So the management of leverage for a business or an individual is key. However, for government, they can print money to pay off their debts. Their management has to be inflation. If they go crazy, and the MMT people who support that, the Warren Moslers of the world, the Stephanie Keltons of the world, will say, we're smart enough to do that. Milton Friedman say, no, you're not. Samuelson say, well, yes, we are. And that really is the debate, is do you trust a government to say, hey, we're smart enough to handle inflation. We get to play by different rules. We have all kinds of ways to keep money, to keep the US dollar strong. We'll tax you more. Now you got to come up with it to pay your taxes, right? Which is what Warren Mosler's, basic theory was. What I think the reason your book is so important, and we can, finish with this, is most people are going into you have your citizens who want to vote a certain way and be educated, but you also, as a consumer, need to be aware of inflation. As a business owner, investor, inflation is the thing I care about. I don't really care which one it is, because I can position myself either way, but I need to see the policies, which one it is, deflationary, inflationary. We're fine as long as we can get a handle of what it is. And so the reason I think books like yours are so important is I think the electorate at large is completely ignorant of what MMT is versus what we might call more Austrian economic theory is. And I just think it's a great education so people can learn and make some of their own decisions about how they feel about it. Systemically, it'll be what it will be. But as an individual, as an investor, I need to be able to understand what's going on. I think that's part of the value of this marvelous narrative between, it's King Kong versus Godzilla, people, I'm telling you, of economics. That's what it is. Last thoughts for people that don't know much about this. Any words of wisdom for people that are saying, I don't know anything about MMT, Keynesian, Austrian economics. Why any parting words for those guys? What would you tell them?
The great left-right divide really is to do with how much government you should have and how strong a government should be, as opposed to how much you leave the free market or business to run itself. And, well, that's been argued about since the collapse of the capitalist system in 1931, when the Great Depression arrived and millions of Americans were out of work for a decade. And it was the most horrible time that America's ever really lived through, even including the Civil War. It was terrible, terrible events. They tried in the post-war period always to make the system much more rational. And the problem with being rational in government is, of course, that the vested interests start coming in and you're actually not doing what you should be doing. You're doing what you're being asked to do because there's a favor for someone or other who needs something fixed. It's well said that the chapter 6 of your book is called To Intervene or Not to Intervene, and that is the question. The book is Samuelson, Friedman, The Battle Over the Free Market by Nicholas Wapshott. Fantastic conversation, and you have such a delightful personality and some great humor. So I can enthusiastically recommend people read your book. All the principal people involved in economics are crazy. I mean, they are real characters. Yeah, very eccentric. It might be a good word for that. So we thank you so much for being. You've been listening to the Cashflow Academy podcast. My guest has been Nicholas Wapshott, the author of Samuelson, Friedman, The Battle Over Free Markets. We'll see you next time.
You've been listening to the Cashflow Academy podcast with Andy Tanner. For more information on investing made easy, go to thecashflowacademy.com.